Hello and welcome to this Pine Chemicals and HCR Conversations podcast brought to you by Argus Media. I'm Leonardo Siqueira, one of the editors of Pine Chemicals here at Argus, and I'm joined today by Steve Williams, Vice President of C5 and Hydrocarbon Resins at Argus. Steve, welcome to our very first episode of Pine Chemicals and HCR Conversations. Demand for South American gum rosin has been weak in recent months, along with lower prices because of higher buy inventories in Europe and not much trading activity. How is the demand outlook for hydrocarbon-based tackifiers and adhesives in Europe and elsewhere?
Well, first, greetings to our listeners for this first podcast in the series. With respect to demand for hydrocarbon tackifiers in Europe and, for that matter, the rest of the globe, we definitely saw weaker demand during the fourth quarter of 2022 and carrying somewhat into the first quarter of 2023. Some of this had been destocking for the end of 2022, but weaker structural demand is also evident in early 2023. We had been seeing tackifier prices move lower in the Western Hemisphere during Q4. Inventories were moving higher in China and better availability for most types of tackifiers within both Europe and the US.
What should be some of the key factors driving supply and demand for hydrocarbon tackifiers progressing into 2023?
Well, in Europe, tackifier production has been weaker. Number of plants shut down or reduced due to poor production economics, labor strikes in France, and most recent round of European sanctions on exported Russian oil products. We would expect European tackifier production to remain on the weaker side for the balance of Q1 and into Q2. China production has been weaker due to very weak domestic demand and export demand, but there's certainly plenty of feedstock and production capacity in China, and they continue to be very aggressive on export pricing to the Americas and especially Europe, which is the bigger export opportunity. Production in the US should be slightly lower to meet a little weaker demand and with what is slightly lower availability of domestic feedstock for resin production with reduced ethylene cracker rates. On the demand side, all eyes are initially on China for the reemergence of demand after the Lunar New Year holiday, and with COVID cases on the decline after the huge peak after the initial elimination of the zero tolerance policy. So for both China and the rest of the globe, we have improved expectations for the second half of 2023 in terms of economic growth, which will obviously help drive improved demand for tackifiers, which are used predominantly in the hot melt adhesive markets. Globally, there's more than enough production capacity to meet increased demand, and increased exports from China to the West are likely to be the result of improving demand as we progress through the year. Feedstock availability for hydrocarbon tackifier production, it's generally not a concern in China, unlike the US or Europe. But it also appears one of the key feedstocks for rosin and especially rosin ester derivative production in North America and Europe, CTO, is getting a lot of attention. Can you comment on the issues surrounding CTO in the US?
Sure, Steve. The supply of crude tall oil CTO, which is a byproduct of the softwood kraft pulping process, is expected to remain tight in the first quarter of this year. With CTO supply scarce in the US and Europe, the world's two largest CTO markets, there is room for sustained price volatility looking into 2023. In the US, about 70% of CTO supply is currently under long-term contract agreements, and the scarce CTO available in the spot market is heard offered at higher prices. Market participants anticipate we will continue to see tight supply, and there is discussion there could be demand destruction because of higher pricing. Buyers discuss moving away certain formulations from fractions like tall oil fatty acids, also known as TOFA. There is also discussion higher feedstock prices can hurt the CTO fractionation business, and fractionators are heard operating at reduced rates.
Leo, how do you see the CTO situation in Europe?
In Europe, supply disruptions and rising energy prices for pulp and paper mills in Europe have accelerated the use of swaps of tall oil for tall oil pitch, known as top or just pitch. And pitch is the bottom fraction, which is obtained by distilling CTO. So fractionators need CTO as a feedstock, while the pulp mills are looking at pitch as a cheaper fuel alternative in face of high energy prices and reduced natural gas supplies. So the terms of the swap deals are often discussed on a case-by-case basis and depend on the existing relationship between seller and buyer. They also depend on the distance between the pulp mill and the fractionator and on the quality of CTO. Sources said that the swap deals should continue into the first quarter of this year, but it is unclear if this will be constrained in the long term by limited pitch supplies because fractionators often get about 30% pitch from CTO. Turning to the rosin part of the business, the supply of tall oil rosin, also known as TOR, is considered sufficient, but demand is heard weaker because of high rosin inventories in Europe. There's also discussion rosin buyers in Europe could be destocking by the end of the first quarter. Rosin destocking, including the destocking of gum rosin in Europe, could lead to increased demand for Brazilian gum rosin. Demand for the South American product has been weak in recent months because of higher buyer inventories in Europe and weakened trading activity. Prices for the Brazilian gum rosin have been down in recent months. But we now hear Chinese buyers are quoting the Brazilian product, and a few deals have been reported below the low end of our price assessment range. Increased demand from China, which has not been in the market for South American product for years, could provide support for higher Brazilian gum rosin prices. And in some other instances, we have seen hydrocarbon-based tackifiers taking market share from rosin derivatives. Steve, do you see any changes in tackifier production capacity which could possibly offset any potential loss of CTO derivative production?
Well, globally, the surplus production capacity for hydrocarbon tackifiers, it generally means that new capacity in the West, where there's a lack of resin feedstocks, is very unlikely to occur. So, and this is it's generally the case as well in Japan and probably in South Korea as well for water white grades. But new tackifier capacity continues to be built in China, where most of the excess capacity already resides. We expect to see new C5 tackifier capacity in late first half or early second half of 2023 from Lua at Goulet. And when market conditions dictate, there's a second C5 tackifier line at Durong in East China, which is also available for startup. Durong also has a water white tackifier line at Zhoushan Island, which should start up in the second half of 2023, really consuming the DCPD feed produced at the site. We also expect the startup of a new DCPD-based water white tackifier unit at Tianli in northwest China during the fourth quarter of 2023. And Lua at Goulet will also have a new water white unit based on DCPD feed, which may start up during early second half of 2023. So as usual, there's no lack of new capacity on the books within China to help fill any void in production. But these are hydrocarbon-based tackifiers, and many large consumers of tackifiers are looking to have at least some portion of a more sustainable and in that case, more likely pine-based tackifier supply in the portfolio. Leo, how do you see the CTO pricing and availability playing out moving forward in time? And what impact do you think it might have on the aspirations of some of these tackifier consumers, including adhesive makers, to meet their sustainability goals?
Steve, in the US, CTO has seen upward price pressure because of a lack of the product in the spot market. So market participants indicate prices may have reached a plateau and buyers excuse moving to alternative stream products due to the higher cost of the feedstock material. So there should be sustained price volatility this year and no CTO expansions are anticipated in the US. The startup of a new pulp mill in Finland in the third quarter of this year may provide some additional volume in Europe, but CTO supply should remain tight. Pricing in Europe may also increase, and pulp mills are expected to continue requiring pitch from fractionators as part of their supply agreements. With CTO supply short and customers of fractions like TOFA looking elsewhere for alternative products, it seems that specialty chemicals and companies willing to use adhesive makers to meet their sustainability goals could be paying a premium for the pine-based raw material. We have seen a few company announcements for the use of CTO-based feedstocks, which will likely include other CTO streams for the production of products such as styrene and amorphous polymers. Steve, can you provide us an update on the tariffs the U.S. imposed on a number of Chinese goods, including tackifiers of all varieties? What kind of impact can these tariffs have on the longer-term imports of both pine-based and hydrocarbon-based tackifiers to the U.S.?
Well, the tariffs implemented in 2018 on many of the Chinese goods exported to the U.S. and more commonly known as Section 301 tariffs saw the initial 4-year implementation period expire in later 2022. Feedback from a number of market participants to the U.S. trade rep during the subsequent 2 months after the initial tariff period saw a number of the participants advocating for the continuation of the tariffs due to what they obviously view as a potential damage caused by the tariffs if they were to be removed. So as part of the trade reps process, this initiated a further investigation by the U.S. trade rep, with the tariffs, continuing to remain in place at this point. The U.S. trade rep initiated a 2-month comment period through mid-January of 2023, whereby any interested or affected parties could comment on the necessity and desirability of extending the tariffs relating to specific HTS codes. The trade rep received almost 1,500 submissions during the comment period, and now they will need to review the comments before proposing any further actions. In the meantime, the tariffs remain in place, and this is likely to be the case, for some period of time. I suspect that we may come out of the review process with an updated and improved methodology for requesting and approving exceptions to the tariffs, but this remains somewhat speculative at this point.
There's no doubt that many industry participants will be watching the outcome of the U.S. Trade Representative's review of the tariffs. Thanks for listening to this podcast. In the next episode, we will discuss trade flows for pine oil resin and gum rosin markets in Brazil and China, the 2 biggest markets for these products. If you would like a discussion about the pine chemicals and hydrocarbon resin markets and how we access prices and market trends at Argus, please send us an email at leonardo.siqueira@argusmedia.com or steven.williams@argusmedia.com. Thanks for listening. Stay tuned for future episodes.